Hello traders and investors, welcome back to the Trend Trader channel. In today's video we're going to be looking at a couple of companies. Some of these companies are listed in the Nasdaq or in the New York Stock Exchange. Basically we will be looking at American companies. And for a start, we would like to remind our subscribers and viewers that if you enjoy the content of this video, please consider liking this video and sharing it with other people. And also, if you are a returning viewer but you haven't subscribed, please consider subscribing. In the past, we mentioned that we were bearish in the tech sector. So in this case, we are looking at the XLK ETF, which tracks the technology sector. It's an SPDR ETF. Even though at some point we had a video when the ETF was promising that it was about to recover. Since then, the ETF started to go lower with the Nasdaq as well and all of the technology sector. We've seen in the past that some companies within the tech sector have been weak, and then we saw that the ETF breaking below this $140 per ETF level there. So at this moment we are bearish on this, and since because we are bearish on this, it means that we managed to avoid some of the things that have been happening lately. The most recent one, we saw that this company Snapchat, it missed its earning. As a result, then it started to fall. We saw that the stock fell for 2 consecutive days, and it brought down other social media companies as well, as it was reported by CNBC. So initially the stock first fell by 30% after market when they announced that the revenue when they missed the revenue and the earnings, they started slowing down. One thing that it's important to notice that most of the tech companies are now slow on hiring, meaning that the investors that kept on saying that they are buying companies because the fundamentals haven't changed, this is a sign that the fundamentals are actually changing. If companies can no longer afford to employ new people, it means that there are problems with those companies. So whenever you want to buy the dips from these companies, you need to take that into consideration. So we see that on Monday, Snapchat, it lost about 30% after market close. But even more interesting is that the following day, the company continued to crash by 43%. At the moment, as of yesterday close, Snapchat was trading just around 12 rand. Not 12 rand, $12.50 there. So already it tells us that there is a bit of a problem within that company. You can see the other stocks like Roku, Snapchat, Pinterest and Trading Desk, but Trading Desk is not a social media company or an advertising company, but we will show you some of the chart so that you can see for yourself the effect of Snapchat in some of these companies. So once again, just to show you the chart of Snapchat. As you can see that when they announced that they were failing earnings, this is on the weekly time frame. So each candle represent 1 week of information. Last week, the stock closed just below $25, and then now it has been halved. It's trading at about $12.79 there. And as you can see, the volume of selling there, it's a bit high. It shows that people are punishing this stock, but now it was not the time to exit. The time to exit was this close here below 55. When that it happened, as you can see, it happened on big volume here, so that was the right time to exit. If you had exited somewhere around 55, you will have avoided all this carnage. That is why in our videos we always encourage people to pay attention to technical analysis and to always take their stop losses as they come. Another company that has dragged people due to hope, because people, they are so hopeful, is Metaverse. We admit that Meta Platforms, it's a company that is promising. The company is profitable, but the truth is, this was initially the first time that we were supposed to exit Meta platforms, but then when it started to show cracks here closing below this support level, that was another sign that you should exit. That was before the shares or the share price of Meta platform started to plunge. As we can see, since then it fell below this level, attempted to rally there, but the selling pressure was just too high. Now the share price of Meta platform is somewhere around $181 per share. Some people, they like to bottom fish. What we like to see Meta platforms finding support first, then pushing high, and then breaking above this level. Then that can bring a bit of confidence that the share price has bottomed. We will not try to catch falling knives. Catching falling knives is the easiest way of losing money, right? So like I said, the other company that was affected is Pinterest. So also this company, as you can see, it's clear, it's nice on a downtrend, but when that snap missed the earnings, then the stock fell somewhere around between $23 and $25 to just below $18 per share there. So we don't know how low it can go, but you can see here we've got this low somewhere around $10. That was the all-time low of the stock. So we don't know if Pins is going to come back and retest this low there. So we're not looking to buy this stock. No matter how cheap the company looks, we are not interested. The only time we want to buy a company, when the share price is going up, right? So now that we have covered this tech, let's look at some of the companies that we have been buying ourselves in our portfolio. We've mentioned that we are bullish in the energy sector, whether it's energy, oil and gas, or companies that are supplying those things. That is where we've been bullish. Initially, we were tracking this sector using the Vanguard Energy ETF. We've been trading a Vanguard Energy ETF since it started trading around $50 per share, and then we've been holding on the way up, taking all those multiple trades whenever it broke to new levels up there. And then there was this resistance level. Let me zoom out a bit so that you can see that resistance level here that you've been paying attention to. So the reason why we're expecting the resistance, we saw that the ETF for several times it had attempted to come back above this level. So we were a bit cautious when the share price approached this level, but we saw the share price trading above this level. So the next resistance level is somewhere around $130 there. So we still anticipate the share price of this ETF to continue to push further to about $130 there. So we still have this position. The total expense ratio of the VDE ETF is 0.1%. That is why we chose this ETF. But there is an alternative ETF from XLE, which also tracks the oil and stuff. So we've got this SPDR Select Sector Fund, which tracks the Energy Select ETF. So depending on whether you are trading the XLE or XOP, one of them has a 0.1% total expense ratio, and then the other one has a total expense ratio of 0.35. But what we want to show you here, it's pretty evident that the share price is on a nice uptrend. We see that it broke above this previous resistance. The chart is similar to VDE, the Vanguard ETF. So depending on which one you prefer, you can see the share price of this is just $84 compared to that $117 of VDE. At this moment, we are using the XLE fund because the XLE fund has fewer holdings compared to the VDE. We believe that because this one has fewer holdings, it is more likely to outperform the VDE because the VDE tracks over 100 companies within the energy, oil and gas sector there. So we are bullish on this energy sector. We've been bullish for a while. We've been buying and selling shares within this sector. So some of the companies that we are going to cover now are coming from this sector, right? And to begin with, we are going to start with a company such as SLB. This is a company that produces or it is involved in that energy sector. So we've been covering this company for a while now. As you can see, we've been waiting for this share price to break above this level here. So there's been a nice consolidation around this level, as you can see. but we've been trying buying and selling as it was moving further up. But our recent buy, it came from this. We saw that the share price has been consolidating above this level, and then it formed this trend line as it was trying to break. So the idea was that whenever the share price break above this trend line as it did, when you look at this, then we are going to buy more shares from SLP. So we see that the trend line breakout has happened somewhere at around $43.90. So then we took a position, and then we have a stop loss just somewhere around $38. As always, it is important that you do have a stop loss whenever you are buying and selling shares, because if ever the share price go lower, then it means that you are going to start lose money, right? What we are paying attention to is this potential resistance level here, somewhere around $48. Once the share price clear this previous level here, once the stock clear this level and then start to close above this level, then we can expect the share price to continue to go up. So we are confident in this trade, but we still have a stop loss, because just because the sector is strong, remember that the general market, the S&P 500 and the Nasdaq and the Dow Jones Industrial are all weak. So basically we are swimming upstream by taking these long positions in a weak market. But if the chart they look positive, then we are going to take those positions. Okay, then another addition is Halliburton. This company, it supplies the energy sector with a different engineering product. They even have a laboratory where they test geothermal coal that is produced. Again, we saw that there was a resistance here. Again, we've been trading this level here, and then we added more shares when it broke above this level, and then we're waiting for the share price to clear this level once again. Then we see here there was a breakout a couple of weeks ago, and then there was a breakout, and then it came back to retest this level, and now it's starting to show some signs of recovery. There we already have a position here, but another place, if you miss to buy the bounce at this level, then you can see that you can either expect a breakout somewhere around this level. Once the share price is trade above $40 per share, then you can add into that existing position, and then we anticipate that the share price is also going to continue to trade further up. One thing that we want to emphasize is that even though we are in a bearish market, there are still some bullish setups that we are taking in our portfolio, and we are able to generate some cash from those positions, even though the overall market is a bit bearish. Okay, so now we are done with the coal companies. Another company that got our attention is Kronos. This company, it supplies some paint product. They sell titanium dioxide. So sometimes, depending on your experience in terms of charting, this does look like a cup and a handle, but then depending on the size of the base there, but this does look like a cup and a handle pattern. And this cup and a handle pattern, it is a bullish continuation pattern there. So basically what it means that when you look at the first range of the cup side, it's a bit longer. Then you look at the range of the handle, it is smaller. So we see that the volatility of this or the range of the share price is contracting. Then what we expect to see, that the more contract that we see or contraction that we see, then we can expect that the share price is going to continue to trade higher. One thing that you should note here is that we see a lot of green candles. It means that there are people that are buying the share. So what we would like to see is a dry up of volume here during that contraction, and then when the breakout happens, ideally we would prefer to see a large candle like this green candle here to show that the buyers are pushing the share price high. But if there is a breakout above the neckline and the volume is below average, then that is a suspicious breakout. It can actually lead to that breakout failing. So ideally we just want to see that above average volume there. But in the meantime, what we see is that, okay, now the share price is trading near this breakout level. So we already have our buy stop order just above this level, about $18 or $19 just above this level, and then again we have our stop loss just below whatever the entry level there. We have about a minus 10% stop loss in case the share price it comes back, because what we don't want the share price to come back and maybe come to retest this level. It means that we'll be wasting time in the market. Instead of making money, we will just be sitting there hoping that the share price is going to recover again. So we released a video on how to use stop orders or limit orders on his equities and buy stop orders. If you haven't watched that video, make sure that you check the description. We will leave a link in the description so that you can see how we use these different order types in order to try and get a good entry in the market, right? So another company that we spoke about in the previous video when we were analyzing the US companies, we spoke about British American Tobacco. So make sure that you get the correct one. If you're a South African, we know that we've got a BTI in the JSE as well, but in this case we are looking at the one that is trading in the New York Security Exchange. So we've been looking at this resistance level here for British American Tobacco. We saw that it broke above this level. It retested it once, and then it came back to retest it again recently. So you can see there it has this trend line. So we first bought a BTI when it broke above this trend line, and then yesterday we added more shares as we saw that it was now it continues to trade higher. You can see that we've got a couple of green candles. It means that the buyers are trying to push the share price higher. So that is the position that we recently took. At this moment, the short-term target, we just want to see BTI coming to somewhere around $47.50. But then the best case scenario is that the share price break above this level, either retest and then continue to trade higher, or it just break above this level and then it continues to trade high. So we are bullish on this BTI as well. Remember, the tobacco companies, some of them are dividend kings. They've been paying dividends for so many years and the dividends are increasing. BTI specifically pays quarterly dividends. We know that some South Africans, they have this stock in their South African portfolio because they do receive those dividends. But another important thing is that this is a defense stock, so meaning that during inflation, it's one of those companies that is still able to be profitable and to continue to pay dividends. Even though we look at chart, we are also mindful of the fundamentals that are happening from these companies. Okay. Right, so now let's see which other company that we haven't covered. We also bought a WWE. So I hope you guys already know that WWE it's a wrestling company. So this way, as we were running a stock screener looking for opportunities, this company came into our attention. One reason that led us to that, you can see that the share price is trading above a key moving average there. It's been respecting that moving average, then it came back to retest here, and then now it's trying to come back to trade above this resistance level there. So that is one thing that caught our attention with WWE, that it is at this resistance level. So now we expect the share price to continue to trade higher there. There isn't much that you can say about WWE, but remember, whenever we're trading price action. For us, in order to make a profit, it means that we need to focus on the exit price, and then we subtract the entry price. That's the only way that you make money in the stock market. You don't make money because you know something about the company or you're buying a company that you love. As long as the exit price is higher than your entry price, then that gives you an opportunity to make a profit. It doesn't matter what that company does. So it is the same thing with WWE. We see that there is a contraction of volume, as we mentioned with that other stock. Again, the volume contracted here. We see that it happened over a series of weeks. And then another thing, we said that the characteristics of an uptrend is that the lows are higher. We see a series of higher lows and higher highs here, right? Even though the stock hasn't created higher high because it keeps on finding resistance somewhere here, but if you look at the low, this low is higher than the previous low of $44. This low is somewhere around $52. So we can already see these two characteristics happening there. Other people, they call these things a couple or wedges whenever they happen. So you see the stock that is rising, and then we expect the share price to close above this level, then the share price can then continue to appreciate. So that's the reason for buying WWE. Remember guys, it's a tough market at the moment, so wherever we have an opportunity to make money, we just make money without being focusing much on what the company does, right? And then lastly, the stock that I would like us to look at is Corteva. Corteva is a fertilizer producing company, or it produces chemicals and seeds for the agriculture. We saw that since the beginning of the Ukraine-Russian war, there's been a shortage of fertilizer. Also, there's just a shortage of other food supplies in general. So fertilizer is one of those supplies that are short in some part of the world, and we saw here in South Africa food is already getting expensive. So the reason why we like Corteva, well, it's benefiting from that war, but initially we saw that the share price, it broke above this level, then it came back to retest. Then we bought more shares. We first bought shares when it broke above this level, that was around March, and then when it came back to retest this level, now somewhere in May, we bought more shares. We just took a nice swing trade there with the stop loss. So we got about 1:5 risk to reward on this trade alone. So it was a good trade. But now I want to bring to your attention is that this was the previous swing high. So now the share price is back at this previous swing high, as we put that pointer there to show that the share price is currently above that high of that day before it started to trend lower. So we're buying this breakout on Corteva. We are adding onto our position. We see this breakout, it was accompanied by a large green volume there. Then because that is it's in the daily time frame, then you can go back to the previous day candle, which is this one, and then you take a multiple of this ATR, you set a stop loss. So you can have a stop loss just below the low of that previous candle there, or you can be a bit generous and maybe go 2 days before. Then that means that is going to be the risk that you are taking from this share. Remember, we always focus on saving the downside. The upside always take care of itself. Another thing to note is that this stock actually reached a new 52-week high, but it's not just a new 52-week high. As you can see, it's an all-time high. An all-time high means that this is the highest price the stock has ever traded since the IPO. The IPO started somewhere around $30 per share. Then the stock consolidated. It moved sideways quite some time before it started to break out since just before the end of 2020. That is when it started its uptrend there. So these are the stocks that we wanted to share with you today. If there is any company that you would like us to cover, make sure that you leave that company in the comment sections. One thing that is important to note is that you saw that all we did here today was just a technical analysis. This is just a reminder that our channel focuses more on technical analysis, and we're able to use technical analysis to find trading and investing opportunities. We don't necessarily need to look at the fundamentals before we can make money in the stock market. We just need just enough information for us to make a decision whether we are buying or selling a company. And technical analysis allow us to quickly make decisions without spending time going through company financial statements and looking at news, because just because you know something about a company, it does not guarantee that you're going to make money. We already know that there are a lot of people that know something about Snapchat. Some people are even saying that Snapchat is still a good company, but a good company will not take 41% of your money in a matter of 2 days. We saw a lot of companies that they've been crashing. People, they like those companies. Earlier on, we spoke about the trade desk. We saw that the share price of Trade Desk is falling below. It doesn't matter what Trade Desk does. If this level does not hold, no matter how good or bad the company, if the share price starts to trade below $40, most likely it's going to come here to $30. It is just based on the chart. It's not a prediction. We are just saying that once the share price is below this level, it is most likely to come to this level, or else if that $30 level does not hold, it can also come back to this level just below $20. So if you buy here thinking that you are buying the dip and then the dip goes to just below $30, you are also going to have to buy another dip here. By the time all this happen, you will have missed all the opportunities from the companies that are going up. All the companies that we covered in today's video, the ones that we bought from KRO, SLB, WWE, Halliburton, all those companies, they pay dividends, they are profitable. These companies like Trade Desk, they are just burning cash, they are not profitable. You're not even gonna get dividends. By the time these companies recover, we will have made money from the other profitable companies, and then we'll be able to come back and buy shares in those companies. Just because we are not buying these companies today does not mean that we are going to miss all those opportunities. So do keep that in mind, that it is just a matter of risk management. We don't want to buy companies that keep on falling. We don't want to buy on hope. We just want to make sure that we are buying something that can potentially give us money. So that's it for today's video. Once again, if you haven't subscribed, please consider subscribing. If you enjoyed the content of this video, please click the like button and share the video with as many people as possible. If you have any questions, comment or suggestions, just leave them in the comment section. So we always respond to all the comments that come into our YouTube channel. That's it for today. We will see you in the next video.